Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. Today we are going to talk about something a little different than we've talked about in this class over the last couple of months. And we are through our rotation, and I sometimes throw in a bonus session. So this rotation's bonus session is the 8 things that I wish I had known about trading and investing and looking at the charts and all of that stuff before I got started or when I got started. Some of it might have just flown over my head and picked up speed, but this is a topic I've covered in the Getting Started with Options series, and it has always been a huge hit. So I thought I'd bring it over to Getting Started with Technical Analysis. So that's what's on the menu for today. I have got the fantastic Mr. Ben Watson with us in the chat. He's a friend and fellow coach. And if you are not following us both on X, you are missing out, my friends. My handle, Barb Armstrong CS, Ben's handle, Ben Watson CS. And if you were at the Dallas Market Drive, we had almost 1,000 people there. Well, with all of us from Schwab, we would have had, I'm sure we had 1,000 people there. And so you want to go and look on X because we both posted lots of images from that weekend. And if you're wondering what a Market Drive event looks like, you may want to go to X and check out those pics as well. Okay. Ben and I had quite an adventure just getting to Dallas because the communications system went out with air traffic control. So we kind of circled the airport hoping they'd get it back going. And then, we were running low on fuel, running out of gas when you're in an airplane, not a good thing. So we got to fly to Oklahoma City. So it was quite an adventure. Ben had the presence of mind to rent a car for us in Oklahoma City, just in case, we had to emulate Home Alone and the whole John Candy polka band, Catherine O'Hara thing in trying to get to the Market Drive. But it all worked out. Okay, with respect to what we're going to talk about today, know that everything we're discussing is for general information purposes only, none of it to be construed as a recommendation or personal investment advice. When we go out and look at the charts, we will use the Paper Money platform on the Thinkorswim desktop. And this is a technical analysis class. It is an introductory level class. But know that this doesn't mean, because we offer a class like this, that Schwab recommends the use of technical analysis as the sole means of investment research. We want to be aware of what is going on in the markets. We want to be aware of when, potential interest rate changes might be announced and the Fed are speaking, what's going on with tariffs. Earnings, all of that stuff. So it pays to have a fairly well-rounded approach. Yeah. Okay. And we're using the Paper Money application. And you know what? It looks like, smells like, feels like real money. There are some nuances and differences. One, a Paper Money account doesn't pay dividends. If a dividend is being paid. Also, short options will never be assigned early. Okay, but we're not focusing as much on the placing of trades as on kind of the thought process around trading and investing and then how we manage it. This class I designed to be taught in a 9-week rotation. And so next week, we're going to go back to the basics, to the introduction. We're going to look at trends and moving averages, support and resistance, candlesticks. We're going to spend several weeks on price patterns. We're going to talk technical indicators, divergences. Every once in a while, I'll throw in one on something like Fibonacci's. So, after we get to lesson 9, we usually throw in a bonus round. Okay, now my one announcement, if you were with us in Dallas, it was quite an event, and I hope you that attended enjoyed it every much as Ben and I enjoyed being there. The next one up is in Chicago, in Schaumburg at the Renaissance. It is October 4th. So if you're within driving distance of Chicago, geez, like I would get on a plane when I lived in the Metro Detroit area in Michigan. And yes, I did watch the Detroit Lions game last night, and it was a nail biter at moments, but ultimately a thing of beauty. Sorry, condolences to the Baltimore fans. But the next one is in Chicago. I would get on a plane. I would drive to Chicago to go to events. So, be there, be square. Still not too late to register. Okay. And we'll have the coffee on. We'll provide breakfast. We'll provide lunch. We'll provide a really awesome reception at the end of the day. Following that, there's a 2-day introduction to options and technical analysis, October 10th and 11th, and then another market drive the weekend before Thanksgiving in Anaheim. Yeah, so that's what's coming up. Now, I had somebody ask, well, what if I can't do those, but I'd like to see what's coming up, down the road. If you go to schwab.com/coaching, and I'll just bring that up. We now actually, yay to the admin team behind the scenes who just make all of this look seamless for us. Here's what's going on till the end of the year. We've got a 2-day event in Houston, and then a 2-day event the weekend before Christmas in Miami. And Ben and I will be there with bells on, perhaps literally. Ben will be at every event till the end of the year. We're kicking off January with a 2-day event in Dallas. Then we're coming to Washington, as in the state of Washington, Bellevue. But we've got things, listed out right through the end of March. Okay. So lots of great stuff to come. And you'll see that some of these say registration coming soon. And so if you want to come to this event in Sacramento in February, just wait. They usually open about 6 weeks ahead. But we have the events right through the middle of December open for registration now. Okay. Yeah. And people are saying, oh, they've already signed up for the Houston event. I can't wait to go to Houston. I'm looking forward to it. It'll be my first time in Houston with one of these events. Okay, so there's that. Let's come back to our regular programming here. And I've got a blank page. Well, did I make a mistake? Actually, I did not. I did this intentionally, and I've now realized I have a slightly more sophisticated drawing tool than I thought. So it used to be, pretty painful chicken scratch. Oh, sorry guys. Didn't mean to go to that. I've had issues getting, oh, okay, just let me close this. Oh, Lord, love a duck. I was posting things on X earlier today, and it still not working. Okay, I'm just going to have to walk us through these. It was working before we started. Like, isn't that the way it goes sometimes? Okay, let me see if I can draw a line. As many of you know, I am Canadian and French Canadian, and speaking without being able to write anything, I just don't know if that's even possible. Okay. It's not clicking in still. Okay. Well, I am just going to go ahead then. Oh, sorry. Okay. Okay, so number one is, do you have a goal? And I kind of break the goals into three buckets when it comes to the world of trading. And so a lot of people, bucket number one is you may already have a giant heap, and what you want to do is protect that heap. So you can use different defensive types of strategies. And in looking at the charts, it gives us an opportunity to determine when we might want to put that protection on. Okay, so that's the first type of goal. Second goal might be income. And I ran into somebody, it was at a Chicago event, and I said, well, how's it going? He said, well, what I was really looking for was a way to come up with a strategy to generate income. And I said, well, how much income do you want to make? And he said, well, I'd like to make $100,000 a year. Now, I have no idea what this guy's account size was. I am not a financial advisor. But I said, well, is there a trading strategy you like? And his was buy right covered calls. And he said, my concern is I don't know how to protect myself to the downside. I showed him how he could put in an exit or a stop that would both buy back the covered call he'd sold and then sell the stock. And said, well, you want to make, if you can make 2,000 a week, 2 times 5 is 10, there's your 100,000. And he was delighted. And then we did a couple of example trades. So, and you might have a $20,000 account or a $30,000 account, and you don't care about income at all. And if you do, the amount of income you want to generate is probably not 2,000 a week. That wouldn't be realistic. But, maybe your goal is growth. And then I say, well, how much growth do you have a specific number in mind? Do you want to grow the account by 10% a year? Do you want to beat the benchmark, which many might consider to be the S&P 500? Protection, growth, and income are often goals when we come to trading, because this isn't a hobby. Or I hope it's not a hobby, because hobbies tend to cost us money. So if you don't want something that's going to be a hobby, then you need to treat it like a business. And if you treat it like a business requires having a goal. What else does it require? Well, it requires having a plan. So number one is have a goal. Number two is have a plan. And, with your plan, if you go through the Getting Started with Options series, I covered, I think, 10 different strategies. So we looked at short verticals and long verticals. You might want to consider buying a stock, an investing strategy. And within the buying a stock category, you could do a swing trade with a stock position. You could be a long-term buy and hold with a stock position. You might want some stocks in your portfolio because they contribute a dividend. But if you're looking at including options in particular, you want to pick 1 or 2 strategies to master first. Because I made the mistake of going through all, 11 strategies. I took a course. I went through all 11 strategies and then figured I should, I'm a smart person, I should be able to trade them all. As you can imagine, that didn't go quite the way I pictured it. So, pick 1 or 2 strategies. And I like to say, and I'm not that creepy person that would do this, and I don't have the skills to get into your house in the middle of the night. But if I were to wake you out of a dead sleep in the middle of the night and asked you what your strategy was, you would know what it was. And then if I asked you how you were trading that strategy, when did you get in? How much were you willing to risk on a trade? When were you getting out? How were you going to manage the trade while you were in it? You would know it like you know it, like you know it. And what I started doing when I finally figured that out is I would open my paper money account, I picked a strategy, and I placed a trade every single day. And I treated it like it was my real money. And if I couldn't find a trade setup that I thought was fantastic, I would put in the notes, I I wouldn't have actually placed this trade in my live account, just practicing, so that if I went back and looked at it, I would understand like why I had placed that trade. So Greg is saying in the chat, is the seat of my pants a strategy? And you know what? I've tried flying by the seat of my pants, and it's just stressful. And it doesn't tend to be incredibly successful either. So first, have a goal. 2, have a plan. And within that plan, pick 1 or 2 strategies to master at a time. And it doesn't mean that you don't want to eventually master many. And I'd say, like, pick a strategy that's congruent with 1, your goals, and then 2, with what's happening in the market currently. And also it's got to be congruent with your account size. If you have a $5,000 account size, picking buy right covered calls might not work that well. Okay. 3, you got to plan for loss. Okay. You need to plan for loss. And so let me just I'm going to see if I can bring up another type of document. Okay. Just 1 second. File, new. Okay. Okay, so I can't stand this not being able to write anything. So we're going to make this bold and big. Okay. Here we go. So 1 was to have a goal, and it could be growth, protection, or income. Okay, maybe a little. Okay, that's good. 2, have a plan and pick 1 strategy at a time. 3, and this is really important, plan for loss. So what do I mean by that? Well, position sizing is really important. So I have 2 different accounts. And so one of the example accounts I have, we start with $25,000 at the beginning of every year. It's the trading a smaller account class. And when I started with that, actually, this year we started with 25,000. All the other years, it's been, we've started with 20,000. Okay, so we start, with 20 or 25,000. Our max loss per trade in that is $500, which is 2% of our account value if our account starts at 25,000. And our position size, our max position size is 5,000. And you might think like that is insane because, I have $1 million account and I would never start with that. I would never put 20% of my portfolio into 1 account or, so max position size 5,000, which is 20% of the account value. Max loss per trade, we had at 500, which is 2%. Now, when you have a smaller account, if you're not willing to risk a little bit more, it's sometimes hard to trade different strategies that might otherwise be appealing. So another example, so this was 1 example, another example might be $1 million account where, your max position size is 5%. And, and so that would be, what, 50,000? but that's still 5% of your account. And your max loss per trade might be half of 1% or even a third of 1%. And that's totally up to the individual trader. When I started trading in my live account, I thought I have to graduate from paper money. But even if let's say I had $1 million account and, half of 1% is $5,000, I might have said, okay, I'm only going to risk $500. It's part of the cost of tuition of learning if I take that loss, but it doesn't mean you have to go from paper trading to fully position sizing. But you've gotta plan for loss. And there's another coach and manager, his name is Scott Thompson, and he said, know what your sleep number is. And by sleep number, he means, sorry, I can type, honestly. So what do I mean by sleep number? And we had this happen. I went to Maui for a vacation and the market tanked and I couldn't get in to adjust our long call vertical positions in our trading a smaller account. And so we didn't have one trade go wrong. We had like 9 trades go wrong and we wanted out at 50%. We took close to 100% loss on a number of those. So it's not just if one trade goes wrong. Yeah. So think about what if 10 trades in a row went wrong? You don't want to so it was a flesh wound. And, we had to go to emerge. It was not trivial. It was $2,500 that we lost on those long verticals in 1 week. So it was over 10% of the account, but we didn't blow up the account. And, a lot of people would have been saying thank the skies above that we didn't position size based on a 50% loss, because then we would have had double the size of our position. So even though our plan was to get out at a 50% loss, we took a much bigger loss than that. Because I wasn't around to manage it and couldn't get in to manage it. And sometimes stuff just happens. And so that's why planning for loss is critical. Okay. Now you may think this sounds nuts, but keep your emotions out of it. Fear, FOMO, hope, love, lovely words, 4-letter words. I can think of a number of other 4-letter words, but these are 4-letter words in the world of trading. Oh, I love Apple and all the Apple products. So I'm going to own the stock. What has love got to do with it? Didn't Tina Turner sing a song about that? Love has nothing to do with trading. And this is where I usually draw circles and cross them out. If my drawing tool, were, playing along with me, and it's not. Yeah. So fear. And the other thing, hope. Here's one. Raise your hands or type into the chat if you've ever done this. Both hands are raised because I have absolutely done this. So great stock when I first started. And then it starts going down. And it doesn't seem to be any discernible reason from what I can figure out for that stock to go down. I'm sure it's going to go back up. And I'm just hoping it goes back up. Well, go look at Peloton, my friends, on a 5-year chart. Go look at Weight Watchers. It lost a lot of weight. We've seen a lot of stocks lose a lot of weight this year. Even though the markets are up, not every stock has played along. UNH is kind of coming around the bend. I posted something on X about that, but it's still down 30% this year. So if you bought it at the beginning of the year, it's been a painful journey. Lululemon. Yeah. has hit, like, it's been low lemon of late. Yeah. So, yeah, and someone said, like, the four-letter words tend to come out when the trade goes against me. So how do we get our emotions in check? Oh, I'm so glad you asked, because that's called rules, and otherwise known as a trading plan or a recipe. My daughter sent me a text the other day and said, "Hey, can I have that recipe for, our favorite pasta?" Like when my kids were really little, it was called Favorite Pasta. It's actually, yeah, from one of my favorite cookbooks, and it's not called that at all. But, so I just took a picture and sent it to her. And we need to have a recipe or a trading plan. And if you're saying, well, where would I find that? And I'm a big fan of know when you're getting out before you get in. But a basic trading plan, it will include what to buy, when to buy, how much to buy, and when to get out. And then also routines. How are you going to manage it once you're in there? And so this is something, that I was like, nerd alert. This is a nerd alert moment here. True Confessions by Barb. Like, I would take the trading plans when I first started, and I just came across more, as I was wading through some paper that I didn't realize still existed. But if you haven't subscribed to the Trader Talks channel, you're going to want to make sure you do. And when you first get here, this is Trader Talks from Schwab coaching on YouTube. What first comes up is what's currently being taught. If you come to playlists, what I did was create a bunch of example trading plans. And these are all in the Getting Started with Technical Analysis series. These are just short snippets on different candlestick patterns. And these are a bunch of different example trading plans. And what they do is they just provide a framework from which you can then create your own trading plan. And then what I did is, like, here's one that we covered in Getting Started with Technical Analysis in this class. And it's an example trading plan for buying a stock, based on a technical analysis plan. And, one of the things was, is the stock uptrending? Is the sector uptrending? Is the general market uptrending? And so I created a checklist and I made copies of it for every strategy. And I basically go through and go, is the market uptrending? I'd look at the S&P and at the NASDAQ. Yep. Is the sector uptrending? Well, it's a stock in the tech sector. Is the tech sector uptrending? Yep. Is this stock uptrending? Yes. And then that, like, does it trade more than 1 million shares a day? Yes. Does it, if it was an option trade, and we just kind of click through the rules and, do I have an entry? Is it breaking above through a diagonal resistance line? Is it bouncing off a support level? Is it breaking through a horizontal resistance line? Like, whatever, and then when do I get out? When do we adjust our stop? Where do we put our stop to get in? So all of these considerations. And when you have that, then you're not trading based on hope and fear. You're trading based on a plan, right? So Chris is saying, I adopted a rule that I shouldn't lose more on any one trade than what my average win size is. So one loss should only take out one win. And you know what? I really like the way you're thinking, and you can make, your position sizing anything you want. But if you're first getting started, you may not have a win rate, and your average win size might be different depending on whether it's an intermediate term trend trade on a stock or a long call vertical. And it depends on how many contracts you're trading if it's a vertical. So that would vary from one strategy to another, perhaps. It just depends on how sophisticated you want to get with this. Now, we are going to come back. So I'm going to just move this over so I can bring it back. So that's number 5, is have a plan. Number 6 is I just want to remind you, I've learned a lot about baseball in the last few years since my daughter met this wonderful young man who's now her husband. And I started watching a bit of baseball. So I'm kind of all over the map. I did cheer for the Detroit Lions in football and the LA Dodgers in baseball because, LA is where my son-in-law grew up. And, base hits, can be a beautiful thing. Small wins. You do not have to hit a grand slam at the bottom of the ninth in the World Series to be considered a success, although that's a pretty epic thing if you do. But small wins, base hits over time. And, if you follow my classes, we talk a lot about, don't be greedy. And this is where it's killing me, not to have my drawing tool, because what I'd really like to do is just draw a line and say, if something moves up by $80 a share, you don't have to get all 80. What if you follow your technical analysis rules and get in when it's crossed a horizontal resistance line and come back to test it as support and then gone up? Maybe you get the middle 60. Not too bad. Like small wins can be a beautiful thing. And so don't underestimate the power. And one of the things with retail traders is there are some that have said that they tend to take their profits early and hold on to their losses too long. And why might they hold on to their losses too long? Well, may I redirect you to number 4? They start trading hope as a strategy instead of following their plans. Right. Yeah. Like, so Eddie is saying, his issue is he doesn't want to get out of the trade when it's not going his way. He keeps hoping for a miracle. You see, hope, 4-letter word, hope. When you go to say hope, just smack yourself. Get up and say, yes, no, I don't trade based on hope. I trade based on a plan. And I listened to this CEO of this investment company in a podcast. I'm sorry that I can't remember his name, but when asked for advice by the interviewer, it's like, if you're trying to figure out this whole learning how to trade and invest thing, what advice would you have for someone? And he said, when a trade goes wrong, when you're wrong, admit it quickly, get out quickly. So maybe I should put that in there. Admit it when you are wrong, and quickly. The faster, the better. Because losing a little beats the stuffing out of losing a lot, right? Now that I've said that, you're going to say, oh, like, is she bipolar? No. Patience. Sometimes the best trade can be no trade at all. So what do I mean by that? Well, you may say, like, hey, this stock is pulling back. And I remember a friend of mine, we were sitting at my kitchen table and we're looking at charts, and I knew she was in a particular stock. I don't remember what the stock was. All I remember is that when I knew she first bought it around 60, and when it finished falling, it was around $11. But it was trading around 38. And I said, hey, did you ever get out of whatever stock, XXX? And she went, oh no, have you seen it? It's on sale. I'm telling everyone they need to buy more. And I said, but there's no sign that it's finished falling. There was no sign that it had hit a bottom and come back. And, like if we look at UNH right now, oops. As a technician, if we look at this stock, This is a stock that's down 31% year to date. It's down 40% from its high here back in April. So it's really been on the struggle bus, right? But if we look at this and we say, well, and now my drawing tools don't want to work, but we had this inverted head and shoulders pattern. And if you go and look at it on X, I drew an arrow. It broke out past this horizontal resistance level and then came back to retest it, and it's bouncing up again. And so we could look at this and say, well, could we be getting into this? If we did this as an example trade of a stock that has been beaten up, that's coming around the corner. And the answer is, yeah, we could do that. Okay. Patience, okay, let me go back to UNH. So what do I mean by patience? Well, let's say when we first looked at this and it was coming up and we're saying, ooh, it looks like this inverted head and shoulders pattern is setting up. Would we have bought in here, here, or here? No, we'd keep watching it. Why? Well, because we don't have a setup yet. We don't have an entry that might meet our entry requirements. So this first day, did we? Yes. And it would be considered more aggressive to get in here. But once it's gone up, come back. Now, sometimes they just go up and they never come back. Who knows if this will follow through? There's no guarantee. But this is where we needed to exhibit patience. Okay. And that's what I mean here, that sometimes just being patient. Okay. And number 8, which is going to be our last one for today, is, don't underestimate the power of compounding and the importance of compounding. I had someone say to me, he was a personal trainer, young guy, and he said, well, it doesn't matter if my account really gets hit, because I have time to recover. But if you take that hit and extrapolate it over 40 years, it does matter, and it matters a great deal. And I recorded 2 videos, and one thing, you may say like a 1% return per year isn't a big deal. It's not a big whoop. It can be a huge whoop. And so the power of compounding, I think it was Einstein who said this is like the 8th wonder of the world. It is a huge deal. And if you want to, do a little, searching on this, one, I'd like you to come back and watch under this trade management mini sessions. I did 2 quick videos, and they're both about 10 minutes long. One was how $5 a day invested over time can grow. And what we did is we took the average of the S&P 500 and the average of the NASDAQ 100 over the last 30 years. And when you added those 2 together and then divided, it came out to 12%. And then in this one, we talked about, the discipline of paying yourself first. It was pretty interesting how those numbers worked out. So if you haven't seen it, watch these. I encourage you to not only watch them, but then share them with friends and family. Because that blew my hair out when I first figured this stuff out. And if we come to, and this is just one site, it's investor.gov. There are several sites out there. I'm not recommending this one, but let's say you started 4 years ago, and we were doing in that the year that, the S&P was down 18%, the NASDAQ was down closer to 30. And because, we went to cash and did a lot of short-term bearish trades, our account was actually up. But if you had 20,000, if you had 20,000, even if you don't put any more in and you let it grow for 47 years at that, I think it was 12.1%, the average of the S&P and the NASDAQ combined. And we're going to compound it because you're going to put it in once a month. Actually, I wish it was twice a month because most people get paid every other week. But what would you have? 27 years. We wanted to do 47 years because this guy was young. So let me come down here. You'd have 5.7 million. Like, that's insane. And you may think like, well, that interest rate is really high. You're not going to get that in any kind of T-bill. This is the average of the S&P and the NASDAQ over the last 30 years. And there's no saying that it will continue to be that, but that is 20,000. Well, what if at the end of that 1 year, you kind of got walloped and you were down, like, let's say you were down around 20%. So that number went to 16,000 and you were at 5,000,007. Now, if we start with 16,000 after one bad year, it costs you $1 million over time. Yeah. So guys, we have to wrap, but I just wanted to point out some of these resources to you. And I apologize that my drawing tools were kind of giving us grief, but here very quickly are the 8 things I wish I'd known. Like, figure out what you want from your investing and then come up with a goal, a smart goal that's specific, measurable, that you believe is achievable and realistic, and put a time frame on it. Pick 1 or 2 strategies to master. And once you achieve mastery, then add more to your kit bag. Plan for loss or position size and be very disciplined about it. Know that emotions are something that all of us humans have, but they are not a trading plan. Okay. And make sure that you have rules in a trading plan that include, those basic parameters. And I've got some examples for you in that trade management mini session playlist. Base hits can be a beautiful thing. So don't overestimate the power of little wins over time, especially when, you can reinvest. And know that patience is part of trading also, not my strong suit, but I've learned to develop it, and take advantage of the power of compounding. So guys, thank you so much for being with me today. I appreciate your attendance and your passion for this topic. There is a survey in the chat today. So if you'd fill that out, there's 2 questions. One was, I hated it. 10, I loved it, and I'm going to keep coming back. Please hit the like button. It helps move things up in the YouTube algorithm so more people can find this content. It also sounds a bit like applause to Ben and I, as Cameron May would say. And then make sure you subscribe to the channel and follow Ben and I in the land of X. We promise there will be no polka videos. Well, maybe I shouldn't promise that, but it's not likely there will be polka videos posted on X, but Ben Watson CS, Barb Armstrong CS, and lots of great content still to come this afternoon. So stick around, and I'll see you in Trading Price Patterns tomorrow. Take care, everyone. Bye for now.